It's tempting to frame what's happening in crypto through the amount of money that has been lost. An industry worth $3 trillion last year has since shrunk by around 2/3. Investors have, of course, lost huge amounts, but the impact on people doesn't end there. The crypto winter is sadly far from over. The fallout from the FTX meltdown is continuing to impact investors and companies right across the sector. This year had already seen a slew of bankruptcies from exchanges, lending platforms and others, and it's all led to large numbers of layoffs as well. Tens of thousands of jobs are thought to have been cut this year. According to Visual Capitalist, an average of over 20,000 were lost in the tech space every month between May and September. But that number surged to almost 60,000 in November, with the likes of Meta, Amazon and Twitter all slashing their headcounts. Larger exchanges in crypto have been hit hard as well. In early December, US-based crypto exchange Kraken announced it was laying off 1,000 people, 30% of its global workforce. Bybit has also made big cuts to its workforce, first in June and then again later in the year. Neil Dundon from Crypto Recruit told Forkast that the market downturn is causing problems absolutely everywhere.
Unfortunately, it's not good news at the moment. We seem to be either at the bottom of the cycle or heading towards the bottom. I think everyone's hoping for a turnaround. They've been quite significant. We're kind of seeing 30 to 40% of most crypto companies, or 30-40% staff reductions even across most crypto companies.
The cuts have looked especially large in the wake of rapid expansion during last year's bull market. Crypto Recruit said that companies are now having to adjust quickly because of the reversal in market fortunes. Mark Hiriar of the digital asset platform OSL said that layoffs are the only way some of these companies are ultimately going to be able to survive.
The key thing about crypto is it's a marathon, it's not a sprint. And so a lot of when you see firms trimming workforces and stuff, which is always unfortunate, I think it's prudent for those firms to be doing so, because ultimately they want to survive and they want to be around for the next cycle.
Salaries as well as jobs are also being cut and hitting the pockets of those relying on crypto employment. The issue, however, may not be the pay levels right now, but actually the scale of them before.
We saw some unbelievable salaries. We were seeing kids coming out of university with a year in, for example, Solidity coding experience, but they had that commercial experience. They were getting upwards of $250 USD. It was insane. They understand that fundamental concept of supply and demand through their crypto trading. Well, then they'll also understand, the supply and demand of jobs within the space. And I think the smart candidates will be those who understand that the supply is a bit bigger at the moment. Therefore, they may need to take a bit of a hit on their salary to get a step in.
Hiriar, however, says he is seeing some interesting new opportunities developing.
We're seeing big institutions globally, whether they're banks, asset managers, hedge funds, fintechs, they are looking to deploy resources to this asset class. They're hiring teams, they're building out compliance processes, they're hiring devs to support this.
Trust in the industry has been badly bruised, and it may take a while for it to recover. A recent CNBC survey said the percentage of Americans with a positive view of crypto had fallen to 8% in November, down from 19% in March.
Sentiment definitely took a hit, but I also think in a weird way, it's kind of needed. Again, it's a very nascent industry. The technology's new. If there are bad actors in place, and obviously the FTX situation remains to be played out, what actually went on over there. But the sooner these actors are removed from the industry, if they are up to no good, it's better for us all in the long term.
That means it may take some time before the industry fully opens its doors again to talent. Dundon said that job prospects likely won't improve until the market does. He doesn't see that happening until interest rates come back down and the broader macro concerns start to ease a little bit. So when will we see light at the end of the tunnel for crypto?
My guess is, between March, second quarter next year, we should start to see that uptick. But for candidates who are looking to get roles at the moment, I think they all need to play ball and understand that we might be in this holding pattern for a while. And silver lining is that once there's a slight rebound in this market, we'll be well prepared to have great talent for for all these companies going forward.
It has been a momentous 12 months for the crypto sector, and we at Forkast have been trying our damnedest to do everything that we can to cover it all. If you like any of the content that we have made, please hit that like button, please subscribe to it and share it. We want to hear your thoughts as well, so leave those in the comments or on social media.